Welcome back to the Everything Property Podcast. Now, what on earth is happening in the Australian residential real estate market these days? Interest rates, undersupplying, over demand, immigration, new technologies. Everyone at the family barbecue has an opinion, some better and informed than others. Today's guest I bring to you for the Everything Property Podcast has been working in the property industry for 20 years with exposure across different markets, cycles, buyers, developers, and industry bodies. She could well have seen not all, but probably most, having spent the last decade at Domain, a platform and I'm sure you as a listener and property enthusiast spend a lot of time on. Belinda Sinclair, welcome to the Everything Property Podcast. How are you?
I'm great, David. Thank you for having me today.
All good. Look, let's dive into it. You've been in the property industry for quite a long time now, but early days pre-Domain, what were you doing and where were you?
So I actually got into property at the raw old age of 18.
Yep.
So I worked as a sales associate for a small builder and developer and was there for around 10 years, focusing on, selling new homes, selling house and land packages, setting up medium density type estates. So all things property on that construction side before I came over to Domain, and also dabbled on the side with a sustainability business that I did as a consultant as well.
Oh, the basics and all that.
Oh, the basics and
modelling
natters and yes.
Oh, okay. And then what sort of sparked the move out of sort of, I suppose, client focused and working for those builder developer and selling that stock and sort of into, well, let's go first jump that into your own consultancy. Was there a gap in the market or what made you sort of jump over?
So I did those two alongside each other. So I was still working with the builder and developer, and on the side, out of hours, I was consulting to other builder and developers to do their energy and basics assessments.
Yep.
And I'd been, sort of in that industry and that area for coming up over 10 years, and two things sparked me. One is I had worked every single Saturday and Sunday for the whole of my 20s.
Wow.
And so that was tough. I loved it, and so I believed in what I was doing, and I love the industry and what I did, but it does take a toll on your social life. And so there's two things I wanted. How do I stay in property, but maybe how could I have a go of having a Saturday or Sunday? And that's actually one of the drivers of how I found Domain.
Okay, and talk to me about your journey through Domain, the sort of the last 10 years at a company, which is huge, and I don't think you see that a lot these days. Like, everyone's sort of jumping around every couple of years. So to work somewhere 10 years is phenomenal, and congratulations on that. But what's keeping you there, and what's happening? What was the journey like through working at one of the largest property companies in Australia?
So what's really driven me, so one is as a business, they've been unbelievably supportive through my career. So I've had 4 roles, from being an individual sales contributor when I started to now I lead a team of over 100 sales and support team nationally.
Wow.
So that's been really exciting to progress through the business, to grow my leadership skills and grow a team alongside working with a company that was really ambitious as well. And so I feel like I've been at 3 or 4 different companies through the journey of the last 10 plus years because of the vision and the ambition that Domain as a business has set, and I think partnered by my passion for property.
How do you manage a team of 100 people?
I'm very busy, but great leaders within my team. So I think that's one of the lessons I learned as I grew my team is how do you scale and how do you scale leadership? And definitely it's about having, the right people on the bus in terms of you have as your leaders. So I have state directors, I have national corporate team, and really segment that team.
What are some of your core beliefs and the way that you manage that team? Like, what are some of the things that you bring in from the outside and from your leadership that you're passing down to all those people and all those managers?
So a big thing for me is being around leading with purpose. And so I think for me, I'm a mum of 2 young children. So when you go to work, you're leaving family time. And so I had to be really clear on what my purpose is with my career and with my role. And so for a long time, that purpose has been, I actually want to build up and help others grow their career so that they have, a great life. They have opportunities to own property and grow wealth and develop their own leadership skills. So that's been a big driver. And also a bit of a perfectionist in terms of being really ambitious, wanting to grow a leadership team that's high performing, but built and supported by a culture and an environment where people have fun when they come to work, and make sure. There was a line thrown at me once a few years ago as a leader, and one of the team members said, I work so hard because I want to make you proud. And so I love that as a principle. Like, how do you support a team so they go out and perform highly because they respect their leaders and they respect the business that they work for?
So is that what you'd feel, what you'd say good leadership is?
Absolutely. Yep. It's trying to find that balance or that tension between driving high performance, but also creating this supportive, engaging culture and environment for people to come and, give their all and do their best.
And what would you say your purpose is then?
My new purpose, so
it would have changed. It sounds like it maybe has changed.
It's shifting.
Shifting.
So it's absolutely still about, supporting and building leaders within my team. I'm also, in that transition at the moment of trying to find my next big thing. And part of that is more of a give back. What could I do for the industry? How could I role model some sort of women in leadership in the property industry? What's my charitable contribution? So I'm right in the hub at the moment of trying to redefine my purpose.
Okay. Well, we might have to
come back on that one.
Get you back on when that's more refined and we know what the answer is. So, all right. Well, look, tell me a little bit. You spent a lot of time with Domain, and you've got an incredible amount of people and resources at your disposal, and great advantage for anyone looking to buy and invest in property and that kind of stuff. But what are you seeing out there in terms of current trends? Now, it could be across your team of the people on the front ground selling, of the economists in the team and trends they're saying. But what are sort of some things we're looking at outlook for 2024 and beyond? What are some of the trends that you're seeing at the moment for affecting real estate in Australia, and also for the next 6-12 months?
So a couple of months ago, working with our cost economist, Dr. Nicola Powell, which I'm sure many of our listeners will know, hugely respected, the outlook for 2024 was of moderate growth. So if we think from a price perspective, we're expecting 7 to 9% price growth across houses and units nationally. Now, that shifted a little bit, that we expected to see Sydney, Brisbane and Adelaide to be on the upper side of that end, and markets like Hobart and Melbourne under, sort of at the lower end of the price growth. I think the other big shift that we've seen and we expect for 2024 is last year was a really tight held year of supply. And I know walking into real estate office after real estate office, if we don't have a reasonable volume of listings coming through, that puts pressure on agents trying to win the listing, that tension, competitiveness with a vendor, even choice. So I think as an investor or a buyer, a first home buyer, really limited on choice. So everyone's feeling quite tense about the experience. And we saw over the last 6 months supply loosen up, particularly in Sydney, Melbourne, metro markets, which is definitely, I expect that to continue. We're unsure. It's been up significantly, 20% in some of our Melbourne and Sydney inner metro markets in the first half of the year. I think it will be interesting to see if that continues. We suspect it will, maybe not as high as that year-on-year growth. And then we're seeing markets like Brisbane that are still very competitive, tightly held, same in WA. And so they're experiencing, I suppose, what Sydney and Melbourne were over the last 12 months. So I think overall, uplifting pricing, but not nearly to those, incredible prices we saw through 21, 22, and more moderate growth of supply.
Okay, and what do you think, is there much difference between capitals and regionals in all those states?
Yes. So across the board, we've seen the metro capitals move first, I suppose, and that's not unusual when we see shifts in market, but Sydney, Melbourne metro has grown a lot faster, and it's been very small to moderate growth in listing volumes in terms of regional markets or outer metro markets. They're starting just to catch up now, so there might be more of a balance, I suspect, in the latter half of this year. Similar with pricing as well. So we saw that unbelievable price growth back a couple of years ago, particularly in regional and coastal markets. And that's definitely been more subdued. And we saw a bit of a resurgence in the metro markets, particularly with houses.
What's your thoughts on the people that are waiting for the drop?
The drop in price?
Yeah, the drop. There's people out there, not going to say they're right or wrong, entitled to their opinion, but there's people out there are waiting to buy because they're waiting for the drop. They're waiting for the correction in house prices to drop or correct, 10, 20%. Those people waiting for that. What are your thoughts?
So if I look at the data, we go back sort of 2 to 3 years and we saw house prices in some markets, I'll take the northern beaches of Sydney for an example, rise over 30+%. We then saw over the last sort of 12 to 18 months a drop of sort of 10 to 15%. And what we're seeing is those prices are now back, not quite as high as they were, but they've recovered probably 3/4 of the way. And so when I look at the data, I don't see that they're, while we're on this recovery and we're almost at recovery, I don't see us having another drop in pricing unless supply just escalated. And I think what we also know, we have a housing supply challenge. We've got migration coming in. We've got, the rental challenges. So personally, I just don't see that happening because we have this, interesting transacting property. We have migration coming in and we've got rents so high that someone renting and with capacity would be looking to buy as well.
Yeah, very true. Well, talk to me about what they are buying, apartments versus houses. What is happening in that space?
So I think, the population is buying everything, but the price they're buying houses versus units is definitely varied. And we see this significant difference or price difference between houses and units in most markets, and the price growth of units much more subdued than houses. In saying that, over the last 6 to 12 months, with affordability, we are seeing apartment prices rise at an increasing rate to what they had done sort of in the years prior. And again, I think that's back off. I don't like always referring back to, the COVID pandemic years and what that did to our property market. But if you look, that absolutely drove houses to be the preference of where people were looking to reside and purchase. And we've definitely seen that shift back into apartments, I think mainly because of an affordability. But looking at investors as well, we saw the last 12 months a whole lot of investors pull out of the market because of the challenges with interest rates. And now I tend to see some interest. I wouldn't say there's been a mass resurgence or interest from investors, but in certain markets, we're seeing some of the finance improvement numbers uptick. And so I suspect that's helping to drive some of that unit price growth as well, and the affordability factor.
Yeah, interesting, because I think as well, it's just affordability these days. With some of the houses out in I'm from the Macarthur area originally, and it's like you could have got and I've bought out there for like in the 4s and the 500,000s, but now it's like a house and land build, a brand new one in a suburb that's, you've got a 300 square metre block, 400 square metre. They're $1 million now.
Yeah. I was the same. I built my first home out at Kellyville when we had all the house and land packages out at Kellyville 20 years ago. And what was 600,000 now is probably 2.5 million now. So hindsight's a wonderful thing with property. But interesting, I think, on that whole affordability challenge and the shift of, interest with units versus houses is if we look at wages growth over the last 10 years, wages have gone up around 27%, which is pretty low. House price growth on average has gone up 83%, and apartments gone up 38%. So you can see, as someone, if you just looking at wage growth and affordability, that I do see there. We have to see this unlock in apartment markets, and I'm surprised how long we've held on to chasing after the house dream. Given that, dynamic between wages and affordability.
Is that over the last 10 years? Sorry?
Yeah.
Over the last 10 years?
Yes.
Wow. So houses
Scary.
have grown. Yeah. Wait, so houses have grown over
80% is house growth compared to wage growth at 27%.
I think that right there, the rate at which houses have grown last 10, 20 years compared to wages, that is the number one topic why, that is the number one reason, in my opinion, that it is so hard for first-time buyers now. And people's parents will say, and old people, if there's any listening to this podcast, will say, oh, it's the same back in my day, it's relative. But when we look at the numbers of the multiple of, your wage to your income back in those days compared to what it is now, and then you take in, I think you take in now of all the other shit, all the new technology, the phones, the things you can buy these days and spend money. The coffee, oh my God, it's probably in the under $1 back in those days. It's just so much more expensive to live, and your wage isn't growing at a rate that's anywhere relative to houses. So it's like, that's where, some people I talk to where apartments can be an option. It's safe, secure, and okay, you don't have a backyard. Maybe you've got a common you can share. Can you be closely located to a park? Can you be closely located to a beach? And there's still CBD suburbs where you can get, not even in the sticks, 300, 400, 500 grand. You can still be pretty centrally well located. You don't have to take care of that stuff. So definitely something I would encourage people to have a look into.
I'll just on that.
Yeah.
I mean, I'm a big believer. Part of the, I've been working in property since a young age, and I very much thought about, I'm going to stay at home. All my friends are moving out at 18, 19, 20, and I decided, no, I'm staying at home till I've got the deposit, till I've bought my first place. Yeah. I couldn't afford to buy where I want to live, but I could afford to buy something. And huge believer of how do you just get in the market, because once you get in the market, it's such an unlock compared to, transitioning and upgrading.
That first purchase, right, is always the hardest. And you think of the word leverage, is that if you've got that 40 grand, for example, or say you've saved 50 grand, if you can leverage that into a house that's $300,000 or $400,000, you're then controlling with that money a 30 grand, a $300,000 or $400,000 house. Now that grows at 10%, you're making 30 to 40 grand. If your 50 grand deposit grows at 10%, you're making 5 grand. And think of how long it takes you, especially in like those early days. Yeah. Your first deposit is so hard to put together.
And feels really unrewarding.
What age were you when you bought that first property?
So I was 23 and I actually got very excited about the prospect and bought and sold some, bought and rent some, and purchased 5 properties over the next 5 years. So I got very excited about property, then realised I had to balance a lifestyle, with property. But it certainly got me in that sort of, early start that I felt really set me up to, make future choices a lot easier.
Anything around sort of the first home buyer space, or any stats or anything you've got for us around there?
So we have seen over the last couple of months the finance approvals for first home buyers increase. So it increased to around, I think it was 4.4% for April. Yep. So that was a good sign. I think what we see in the market's that consumer sentiment, and that's been driven a lot by interest rate rises, and the fact that they have held for a few months now is definitely allowing, while interest rates are incredibly high at, over 6% for most people, the fact that they're staying, people hate uncertainty, and uncertainty when you're waiting every month of, is it going to go up again? Is it going to go up again? I think we've seen this shift that at least people know what they're up for and therefore can plan and start to get ready for purchase.
Very true. What's your thoughts around the sentiment, or any words or advice that you have for people out there that are reading and watching the news? Because you guys obviously Domain puts out and is a contributor to some of those stories, but I know the main news bodies, a lot of the sentiment of the articles, if you were to do a tally and say it's a green tick, it's positive, if it's a red tick, it's negative, a lot of them sort of lean to the negative side, right? Because that news sells better.
Absolutely, clickbait. Yeah.
So, what are your thoughts on that though? If someone's out there looking to buy and or looking long term, is there other things that they should look out for other than what's the latest headline?
Yeah, I'd be really careful, educating yourself about what's happening in the market or the economy or property off the news. I would absolutely be encouraged to listen to podcasts like this from, people in the know. read, and I know domain hosts, that's probably one of the areas we're most proud of. Is the goal for us is to help inspire confidence in your property decisions, and a lot of that comes back to education and insights and knowledge. And so we have a content and research page as part of our site and on our app that I would absolutely suggest. We have incredible data and insights that are packaged up really simply for someone to read if you're thinking about investing or thinking about buying, and getting some real clear knowledge of what's happening in the various markets. I think the other thing to watch out for is you can throw out a national stat and that looks very different to what's happening in your local market. And that's what gets lost a lot on the news and some of the research that I've even shared today. There's micro markets all across Australia and they're all operating slightly different. And so I suppose depending on what your driver is for purchasing or investing is you need to really consider that localised market and what's happening. And another step on that is, speak to, I know we get scared of real estate agents because we always think they're trying to sell us something, but they are an incredible source of knowledge. And so if you can build some sort of trusted relationships with a couple of real estate agents in the markets that you're looking at, generally they'll go over and above to share their knowledge, especially if you're in that research stage and not negotiating on the house.
Okay, but tell me, because I feel like a real estate agent will always say it's a great time to sell your property because it's business for them. But what should I be asking the agent or looking out for?
I think there's a couple of things. If you're doing your research purely and you're not yet in a position to buy and sell, I think be upfront and honest. Most of them, if they're not switching, and I'm speaking really broadly, generalist and broadly here, but most of them have the intent that they want to create lifelong sort of partners and customers, and to do that they need to build trust and credibility. And so therefore, if it's not about particularly negotiating on a home you're trying to buy or sell, then they're often a lot more broad and general in that feedback, and it's less about trying to get the best price for the home they're selling. So I think going to open homes and researching like that in the market, I know going along to auctions can be incredibly insightful to understand the sentiment in the market at that time. You look at auction clearance rates.
You've led into my next question, so you've done well. You've read the show notes. Perfect.
So, obviously...
Auctions.
Auction clearance rates.
Clearance rates.
Yeah, I think auction clearance rates are one of those data points that just really help to understand both the balance between supply and demand in a particular market, and also a little bit about that consumer sentiment. We've seen over the last 12 months auction clearance rates come down in most markets. They're sitting in the mid-60s in Sydney. I think they were down to like 59% last week in Melbourne and 48% in Brisbane. Though Brisbane, take with a grain of salt because they're not a high volume auction market. So, but in Sydney and Melbourne, we were in the 60s and 70s for a lot of last year. So it's come down almost 10% in most of those markets, which shows, I think it's mostly a result of that increase in supply that we've seen over the last 6 months. And
where's that supply coming from?
People who had held off last year with the uncertainty of what was going on with interest rates. Two reasons. When supply is really low, we normally see vendors going, I want to sell, but I'm not confident I can buy my next home. And generally people don't want to be out of the market too long because they worry about price increases and getting priced out. So when there's low listing environments, though you'll probably get a great price for your property, vendors get really nervous about putting their home on the market. So you see this, sort of push and pull and tension between that. Over the last 6 months, it was almost literally from about November, December, as soon as we saw this sort of pausing and holding of interest rates, it's like all those people that had just been holding on for that certainty to know what's going to happen start to the floodgates open essentially.
Yeah, that's a very good point, because you can sell at a really good, but if you're entering that same market, you're also paying through the nose. One thing I want to probably touch on with auction clearance rates as well to look at that rate, and we posted some content on this. Also need to watch the trend, because a clearance rate of, it could be 65 or 70 in one market, could be, there's low stock moving. Whereas if that trend has just came up from, 40s or 30s and 40s or something like that, obviously, hopefully not 30s, but it's moving that way. Whereas if it's been at 70, it's coming down.
Yes.
It's important to watch the trend. I know you're not a economist, but what are your thoughts on interest rates and what do you think will happen, in terms of rate rises and just we're not going to hold you to it, but what do you think?
Thank you.
What do you think will happen sort of over the next 6 months or run out what you think maybe the scenario might be?
If you'd asked me a couple of months ago, I was absolutely thinking we're going to have, hold for a few months and probably drop mid-year.
Ooh.
So that's what I was thinking at the start of the year, once we'd held for a few months and we started to see inflation coming down. I think there's just a lot of things going on, and we saw a bit of that playing out with the budget, that we've got this tension between, we've got cost of living challenges at the same time is to try and support the cost of living, you end up investing in and adding, money into the market that drives inflation. So my new prediction is we will hold for a lot longer, and if we're going to see a rate drop, I think it would be very latter of the year to into the new year.
Little Chrissy present or something.
Yeah, which is really unfortunate to me. I'm about to come off. I've been on that sweet 3-year fixed interest rates with my home. And so
at what? What have you been fixed at?
209%. So I don't want to, I know that makes a lot of people cry, but it makes me cry knowing what I'm moving on to very shortly as well.
Must be nice. 2.09%. Jesus, congrats, but also good luck.
Yeah, good luck. Yeah,
with that coming off and tripling. That's another thing that I talked about a little bit on socials and stuff too. That people think that landlords put up their costs. That's obviously your PPR, but people think landlord put up their costs to cover interest rate rise as well. If you're going from a 2% interest rate a year on $1 million property, that's a $20,000 bill. Out into a 6% interest rate is now a $60,000 bill. So that's tripled. And a lot of people, I don't think their rents have probably tripled. In unfortunate cases, there maybe, but most of the time, the market would dictate that, and it just can't happen that landlords will be able to cover all their expenses. You mentioned just then briefly with the budget coming out, did you have any sort of a little bit off topic, but on topic too, did you see anything in there for property investors or first home buyers or anything? Did you have any thoughts on the budget regarding property? Surely a hot topic.
So not an expert on this one, so mindful of the response, but I think two things caught my eye. One is that we are not seeing the change or the policy on what we need to happen to help supply, and therefore we're going to continue to see this tension both on, rentals and on sales prices because we have migration coming in. And so I think that housing supply challenge, though there's a policy in place, by the looks of it, we're not hitting our yearly thresholds that we need to for that to actually be successful. And so I see that just continuing and, potentially getting worse before it gets better, which is a challenge. And the other thing I think we saw is around some extension of some of the first home buyer grants that were meant to finish up. So I'm hoping, there is a little bit of resurgence for first home buyers, as I said, both based on hopefully a more stable market where at least we know what we're getting into. And secondly, those, extension of some of the options, some of the states and national has in terms of supporting that first purchase.
Yeah, okay, interesting. It's always worth asking people because people have a lot of different takes. I think I saw in there they were looking at trying to slash that immigration figure that was coming in. I think I read that correctly. Yeah. So
because it has been very strong, like very high. I saw particularly around some of the student migration that will get tighter on that as well. And where we were looking to open up was more those skilled ones that can contribute to things like construction industry, where we need the trades hopefully to start unlocking.
Because if people don't want to let any the migrants in, well then I think your issue is in the budget provided. I think there was a little bit of funding in there to go into the education for new trades and stuff like that to help that out. But by the time you roll that person through, that young person, or maybe the mature aged person through all that training, you have years and years of delay. So you're not going to see that come into fruition until years down the track. And it's like everyone wants an answer now, but I'm not too sure if there is an answer right now. But
I think it's an interesting one because you look at, wages and costs. So trades are doing unbelievably well and they've got loads of work, yet we're not necessarily encouraging more, young people to move industries around it. So that's why I think if there was ever a time to get into trades, it would have been the last, 3 or 4 years. And yet we're still not seeing that demand able to be met. And so it looks like migration is really, the option that we need.
Yeah. It's a double-edged sword though, right? Because the more people that come over, the
we've
more
got
houses
to house
they
them.
need.
Exactly.
Yeah, okay, perfect. Do you have any other any stats, findings or trends for us?
I think the other one for me just to note is around, you mentioned the rental yields and how as an investor.
What's happening for renters?
So rental increases continue to come through. So we're seeing that play out in markets. We're still at record low vacancy rates. So think about Brisbane, so Sydney and Melbourne markets. I think we're at 0.8% vacancy, which is just unheard of and, scary.
Yep.
And so accordingly, there is still that pressure to raise rents because of, one, the competitive nature, and then secondly, the cost of, the investor owners to recoup and sustain what they can and a yield that they can afford to maintain during this period. And as you said, I think that's the misconception. Renters are feeling like they're getting such a dud deal, and they are, but at the same time, investors are getting such a, in a lot of areas, dud deal as well because of the cost to repair properties, the cost to, pay your finance on that property. So there's real tension on both sides. And for me, that's the unlock. And again, I don't think I'm the person who's going to solve the housing crisis for Australia.
But if you've got an answer, if you've got, you think, a solution or a policy around that would help?
Well, I think what I've seen not work is what's happening in Melbourne and Victoria. And so that government has increased a land tax on investment properties, trying to recoup some of the money that was spent through COVID in that state. And what we see, why that recoups money, it also encourages a lot of the investors across the country are mum and dads who just have a second property.
Thank you. They took the words out of my mouth.
Yeah, and they're the ones who absolutely can't afford that land tax to come in because that just made their investment not viable anymore. And we saw, as I said, it stabilised and starting to come up a little bit over the last 6 months, but the 12, 18 months before that, we saw, a mass exodus in some markets, and it's been particularly tough in Melbourne, where we have apartments in the city that are actually, I think, really well priced, vacant, available for sale, and yet there isn't the investor who feels like they can afford to have an investment property and run that profitably. So for me, everything we can do, I know, people think you don't want to make the rich richer, and that's what people's perception is around investors. But for so many investors, it is that second property that you just want to, build your own wealth and security. And that if we could help solve and encourage that, I think that's where we could open up and help with rent. And
Interesting, because I think it was the stats that we put up. I post about this all the time, passionate about it. I think 84% of all the rentals out there of the rental market is owned by private investors.
Yeah.
And then if you break that down to the people that have over 6 properties, these big greedy landlords, it's like 0.9%. It's something like 20,000 people in the whole of Australia.
Yeah.
It's not like this portrait that people paint of like everyone's got a gazillion.
The big bad,
big bad
investors with all their properties.
And even you touched on a good point about land tax, and the government's looking to tax and stuff developers, which is sort of an area of work that that I work in, and I don't think it's the answer, because what that does is that just all these land tax or levies and charges that councils and that put on, okay, that just adds to the cost base of that developer developing that house or that apartment, which means the developer needs to make a profit. Obviously, can't do it for free. You'd be absolutely ludicrous to do any of these for free. You need to make a profit.
Yeah.
So that just gets added on, and then the profit margin that they need to have to satisfy the banks that they make on a project will get added on top. So all these things, the developer will pay it, but it just make the stock more expensive.
Yeah.
And the first time buyer or the people trying to get into the market will end up
again.
Priced up. So it's going to take some sort of
big moves,
some big moves and some big solutions. Is there anything to sort of close up, Belinda? Anything else you sort of want to add that we're seeing or that we need to look out for?
I'd just touch on, I think I don't run our commercial and developer side of the business. A colleague of mine does. But what we have absolutely seen over the last 12, 18 months is this continual decline in the number of new developments coming through. And I think to that exact reason, building approvals, I think, uptick just slightly because there is pressure on councils to move them through faster. And so we're seeing a little bit of movement on approvals.
Yeah.
But what we're not seeing is that ability to make the development profitable, and all the restrictions that, finance and banks are putting on a developer to pre-sell such a high percentage of stock, before they can even get started and secure finance has just been a challenge, along with the cost of trades and actual construction as well. So that's not an area hopefully it recovers and continues to get a little bit better, but I think we're a little while away from that really taking off as well.
Building approvals, though, are only half of the story. Very easy, not very easy, but difficult to get it approved. But then you've got to build it, and then completions is what you want to be looking at and comparing it with, because it's one thing to get something approved, and there's plenty of developers out there. I think AV Jennings as well, to name one, that was doing a lot of land banking for house and land estates and stuff. Land banking because they're not feasible at the moment, and then just the looking and the forecasting of what's actually being completed compared to forecast. It's worrying. But look, Belinda, at the end of the podcast, I often ask people, what is a quote they live their life by? What do you got for me?
It's actually something my mother used to say when I was younger, and absolutely haven't embraced it, but it's do today what others won't, so you can have tomorrow what others can't. And I think there is so many ways you can think about that quote, from thinking about delayed gratification, from thinking about work ethic, from thinking about, how you approach your life in terms of thinking out of the box. It's okay to do something different, and just be really clear on, that purpose for yourself, that vision for what you want to achieve, both personally, professionally, and, financially. And making those sort of short-term sacrifices to set you up for long-term success in any of those areas has been really important to me.
Perfect. Well, we'll end on that note. Thank you very much, Belinda Sinclair, for coming on the Everything Property podcast.
Thank you, David. Been great to be here.